threatened global energy market stability. Why was this the case? Because remember, back then there was a sharp spike in oil prices, and oil prices, Brent crude specifically, hit $137 per barrel. This was in March 2022. This was after Russia invaded Ukraine. Now, cut to November of 2022. U.S. Treasury Secretary Janet Yellen said, and I quote, "The United States is happy for India to continue buying as much Russian oil as it wants, including at prices above a G7 imposed price cap mechanism, if it steers clear of Western insurance, finance and maritime services bound by the cap." Now, this was Janet Yellen in November of 2022, saying that the U.S. supported India's decision to buy Russian crude, in fact, encouraged it. Let's go a step further. In February of 2024, U.S. Assistant Secretary of State Jeffrey Pyatt acknowledged India's role in stabilizing global energy markets. He said, and I quote again, "India has played a key role in efforts to stabilize global energy markets through its purchase of Russian crude." Now, this is again the position of the U.S. administration, not the Trump administration, but the U.S. administration nevertheless. Now, just a few months ago, in May of 2024, U.S. Ambassador to India, Eric Garcetti, admitted that India bought Russian oil because the U.S. wanted somebody to buy Russian oil, and the U.S. allowed the purchase to ensure oil prices do not go up globally. New Delhi also called out the U.S. and Europe for criticizing India's trade with Russia when both the EU and the US themselves are indulging in trade with Russia. The ministry said Europe's bilateral trade with Russia in 2024 was worth over 67 billion euros in terms of both goods and services trade, worth over 17 billion euros in 2023. So you can see that there's been a significant increase. This, the Indian government says, is much more than India's total trade with Russia in the same period. Now, India is also calling out the US for importing uranium hexafluoride for its nuclear industry and palladium for its EV industry, along with fertilizers from Russia. That's not all. India has meanwhile been increasing its energy imports from the US. So remember, Trump's call to action saying that India must buy more from the US. Well, India has been doing just that. In fact, just in the first quarter of this financial year, US energy imports are up 114%. The share of US crude in India's import basket has risen from 3% to 8% in the month of July alone. Now, India is estimating a 150% rise in energy imports from the US this year. So that is where things currently stand as far as India importing energy from the US is concerned. The important question to ask also is that why has the US not sanctioned Russian oil? Remember, there is no sanction on Russian oil. There are sanctions on oil coming in, for instance, from Venezuela, from Iran. There is no sanction on Russian oil. So India's position is that it has been dealing with Russia as per the global norms and as per the price cap mechanism that has been put in place at this point in time. That is the position for now.
And here's former U.S. Ambassador to India, Eric Garcetti, admitting that India bought Russian oil because the U.S. wanted someone to buy Russian oil and not disrupt the global energy prices.
And we take the smaller victories, like actually they bought Russian oil because we wanted somebody to buy Russian oil at a price cap. That was not a violation or anything. It was actually the design of the policy, because as a commodity, we didn't want oil prices going up, and they fulfilled that.
To take this forward, I'm now joined by Christian de Guzman, Senior Vice President with the Sovereign and Sub-Sovereign Risk Group at Moody's Ratings. Thank you very much for joining us on the program, Christian. Let me begin by asking you, on Monday, you had shared an outlook. Moody's had shared an outlook saying that India, with 25% tariff that has been slapped by the United States, will now be at a disadvantage compared to other APAC economies, which have tariffs in the range of 15 to 20%. At that time, you had also mentioned a potential risk of penalty. Now, Donald Trump has announced substantially high tariffs as a penalty for India's Russian oil imports. How would you revise your outlook on the Indian economy and the trade impact on India?
Well, I think let's take a deep breath here. I think when we're talking about announcements, there hasn't been anything other than a tweet. And tweet, I think, as we all know, isn't exactly policy, because under this administration, actual policy, when it comes down to the outcomes of negotiations, can actually be very different from a tweet. And tweets do appear to be somewhat of a negotiating tactic when you see all the sort of bluster that precedes actual agreements or outcomes. And it doesn't have to deal with trade. It can be other things. But this is just how the Trump administration conducts itself. Having said that, this is a pretty serious. I think the prospects of that penalty tariff has gone up just because it has been announced specifically for India. But let's also take a step back in the sense that previously, about a week beforehand, Trump had also announced that there could be penalty tariffs of up to 100% for all other countries that are importing Russian oil. So India perhaps is not quite targeted in that sense, but India was top of mind clearly when Trump wrote this message.
Right. And how do you see a risk to India, especially if it had to cut off supplies of Russian oil, buy more US energy, increase more supplies from West Africa, Middle East for that matter? How do you see India's crude import bill increasing?
Well, indeed, it would be an increase in the crude import bill. So, but let me just take a step back. It is our understanding that that the purchases of India's purchases of Russian oil did come at somewhat of a discount, at least previously. So, by actually purchasing oil at global market prices from, it doesn't matter where, either from the US or from the Middle East or from Africa, this will indeed increase the crude oil import bill. And that will help to widen the current account deficit. Now, for us, we don't think that's necessarily a problem. We don't think external vulnerability is as much of an issue for India as it used to be, let's say in 2013. During the taper tantrum, the financing is readily available for India to fill in any sort of current account deficit widening. But indeed, this could perhaps apply pressure to things like the rupee. But we don't necessarily see that this is going to be a significantly disadvantageous development if there is no disruption to the supply of crude oil imports. Here again, it doesn't matter where it's coming from, just that the supply of crude continues to flow into India and continues to fuel, literally, economic activity.
Right. Christian, if I were to ask you about risks to India as a result of a 25% penalty, a 25% tariff, plus an additional penalty that could be imposed in the days to come, what will be the pain points from India for India going forward?
Okay, so indeed, this is going to be perhaps more disadvantageous, and especially over the medium to long term, as India's ambitions to be more of an export powerhouse, to compete with a lot of its Asian neighbors. That's going to be sort of cast in doubt if there are additional tariffs on top of the 25% already. I think, as you mentioned, we had highlighted that this was already above what was being assessed for its peers in Southeast Asia in particular. So this would severely curtail perhaps the sort of growth outlook for the export sector in India's ambitions in that. However, I think what we can also take comfort with is that this is still the world's largest economy by population. This is a very large domestic market. And India, because of that size of that domestic market, we see as being much more resilient to external shocks than perhaps its peers, which are much more export oriented.
Right. Which are some of the sectors which you feel will be impacted the most in India as a result of the 25% tariff, which is the highest among APAC economies, plus an additional penalty? You mentioned electronic products in your initial outlook on Monday.
Right. It is indeed those products where it is seeking to compete or to gain market share in the sort of the global production of certain goods. When you're talking about electronics, mobile phones were already there. I think it's quite well known that India produces more mobile phones than anybody else. So, but it is the other higher value added electronics which could be put at a disadvantage. There are also other higher value added types of manufactured goods when we're talking about with the things that you're competing on with regards to the China +1 type of flows, that trade and investment diversion away from China. Now, we're highlighting this because there was this expectation that India, given its large labor pool, given the low cost of labor, given some of the other advantages, including the government's focus on promoting such investments, was in a good position to actually attract those investments. But now, perhaps that outlook is unclear.
Right. Christian, how critical do you think is it for India to come to a trade deal? You know, there is a worry. Tariffs bring in additional revenues, even if it's a few $100 billion. Now, the worry is that if tariffs are imposed and there is no deal, then these tariffs will remain at this level, even with the next administration. But if these tariffs were to stay, at least for this year, what will be the impact on India's growth?
Well, once again, I would sort of harken back to the structure of the economy. This economy is a lot more domestically focused, domestically oriented. Yes, it is a large exporter of goods for certain products, pharmaceuticals, mobile phones, and things like that. But at the end of the day, we see that the domestic momentum is still fairly resilient. There is going to be downside risks, as we have highlighted, and those downside risks are getting a lot higher. But having said that, we don't expect growth to be, a recessionary, if you will. There will be some domestic offset to those external shocks.
Right. My final question to you would be, why do you think Trump is targeting India so much on a daily basis, threatening India so much for buying Russian oil, but not targeting China, which also purchases Russian goods and Russian energy?
Well, I think your guess is as good as mine, but I think we do know that this president, this U.S. president, does speak off the cuff, and whatever is on the top of his mind ends up in a tweet. So perhaps there are certain things that were going on in the White House that morning, that evening, that prompted these tweets, and they may not have been China related, but perhaps India related. But I think, like I mentioned, your guess is as good as mine.
All right, Christian Guzman, thank you so much for joining us here on News Center, giving us your view and telling us that there is no recessionary impact that you expect as a result of these Trump tariffs, but you feel there are downside risks for the Indian economy. Time for a short break, but coming up, Niti Aayog has recommended a stringent plan for production and purchase of EVs across the country. A special discussion with Sudhendu Jyoti Sinha, Program Director of Electric Mobility at Niti Aayog, when we are back.